Hey guys, so while I was gardening, a question came up to me and I asked myself, are people actually investing right now or are they saving their money? Now in this video, we're actually going to answer that one. Hey guys, if you're new to the channel, my name is Dredd and I post personal finance and dividend investing videos, and currently I am documenting my journey in paying off my student loans. So if you are interested in seeing how everything unfolds, or you just want to show your support, then definitely subscribe to this channel and hit the notification bell so that you can get updated whenever I post new videos. Like this video as well because that will help with the YouTube algorithm, and thank you so much for doing that in advance. Now with that out of the way, let's get back to the video. So I understand that a lot of people hate talking about money. In a Wells Fargo survey that they did, they found out that 44% of Americans consider talking about money more challenging than talking about death or politics, okay? And that's a pretty crazy number because if you really think about it, money is all around us. You know, it's in your school, it's in your job, it's in your marriage, it's in your kids. Everything is basically run by money or has some sort of involvement with money. Now, Filipinos, on the other hand, neither have the like or the dislike about the topic. We understand the sacrifices it needs to actually make money, but we still have some bad money habits that we have, especially about putting off things at a later date, which we call mañana habit, and we also like spending huge amounts of money in pasalubongs or throwing huge parties for whatever reason. So the best way to start fixing our bad money habits is to either start saving your money or investing your money. Now, the answer to should I save or should I invest right now really depends on what matters to you, what your goals are, and your current circumstances. Now, your goals should have some sort of time frame attached to it because, as you know, goals cannot be called goals if you do not have any deadlines for it. But before you answer the big question, you should ask yourself these 4 questions first to truly assess your current financial standing. The first question you need to ask yourself is, do you have an emergency fund worth 3 to 6 months of expenses? Now, emergency fund or rainy day fund or fund that you kind of like save up for emergency purposes or whatever you want to call it is basically a pool of money that you kind of save in case of emergencies. Okay, basically this is one of your break this glass only in case of emergencies kind of thing. That's what emergency funds are. Now this is one of the things that a lot of financial advisors, okay, tell their clients. Now I am not a financial advisor, so do your own research, and I'm only doing this for educational and entertainment purposes only, okay? I'm not a financial advisor. I'm just gonna put it out there. Okay, anyway, they actually always tell this to their clients and to always put in around 3 to 6 months of expenses because those are good enough times for you to kind of like replenish your income. If you have a job that you just lost, at least it'll give you 3 to 6 months to kind of like look for another job and kind of like replace your income. And I actually like the idea of having an emergency fund because it's for a good reason. You know, in case that you have some things that come up and you didn't plan for them, at least your emergency fund will help you survive financially. Now personally for me, I prefer having 6 months worth of expenses in my emergency fund just because it's enough time for me to kind of like I said earlier, replenish the income that I've lost. Now, aside from having a 6-month worth of emergency fund, I also like putting these savings into an HYSA or a high yield savings account because it will generate me more money in interests per month. HYSAs typically produce more interest than traditional savings account from traditional banks, so it is a very attractive proposition for me. If you do not have an emergency fund set up already, then I suggest that you start doing this one. So the second question that you need to ask yourself is, do you need the money right now? Now, liquidity is a very big factor when it comes to your money, whether we're on a crisis or not, because having the ability to take out your money anytime that you need it is so important, and it should key in to your decision. If you feel like you need the money 3 to 6 months from now, then I suggest that you just save the money because this way you can take it out anytime you want and use it for your necessities, to pay for bills or to pay for some sort of medical expense that might just come up along the way. But if you feel like you're not going to use the money anytime soon, then investing your money right now is your best bet. At least you can put your money to good use. Now, the third question that you need to ask yourself is, how much cash do I currently have? So knowing how much cash you have left on your wallet or your bank account should key into your decision, and it's very, very important because this way you know where you are right now, whether you can survive in the long term or in the short term. And let me tell you something here, okay? Whenever you see your wallet or your bank account and you see different numbers or different amounts in it, it has different effects as well to you, okay? If you see like a moderate amount of money that is pretty much enough to pay your bills, buy for your necessities, you know, the effect on your mental health is like meh, something like that. But if you see some sort of positive amount, maybe you have like a lot of extras in your bank account, you know, very big buffer to pay for your bills, whatnot, and then after that you have some leisure spending, then that has a very calming effect. You are less anxious with the amount of money that you have because you have an abundance of it, okay? But for example, if you do not have any money in your bank account, or if you have a negative balance on your bank account, that will make you more and more anxious every day, you know, until you see the day that it has zero in it, or, you know, a positive amount. And that's one thing that you should really think about, okay? The money that you have in your bank account right now will have tremendous effects on you and your mental health. And if your mental health is kind of like spiraling down, it will make it harder for you to actually move on, you know. It will get you stuck, and it will pretty much like hinder your progress to kind of like move forward and find out ways to fix the problem. So think about that for a minute, you know, let it settle down, and then after that, make sure that you have some sort of cash in your wallet right now before you actually make some investing or saving decision. But in reality, you don't really need a lot of cash to start saving or investing. What really matters most is when you start doing it, because the sooner you start doing saving or investing into something, the more money that you can generate over time. However, if you're low on cash, then I recommend that you just save the money and build your emergency fund. If you have a lot of extra and you are very comfortable of losing some sort of money, then, you know, go ahead and invest your money. At least you are putting it to good use again. Now, the last and fourth question that you need to ask yourself is, what is your risk tolerance? Now, risk tolerance is basically how much loss you can stomach. Think about this. If you have $1,000 in your wallet or 1,000 pesos in your wallet, if you're comfortable of losing everything, then you have a very high risk tolerance. But if you are only comfortable with losing like 100 of it, then you have a very low risk tolerance, okay? And risk tolerance is something that you should always key into your investing or saving decisions. Saving and investing in a stock market, for example, require different levels of risk tolerance. Now, you might think that there aren't any risks involved in saving, but there is actually. Now, the risk with saving money is its opportunity cost. Now, think about this. If you save your money in a bank and you just, you know, let it sit there, it only nets you like a small interest per month or per year, depending on what rates and how frequent your bank actually pays your interest. Now, if you save your money traditionally, maybe, you know, putting it in your piggy bank or, you know, hiding it under your mattress, those type of methods will not generate you interest at all. So you're basically losing potential for your money. But investing, on the other hand, is riskier but has more potential for bigger gains. Investing your extra money in the stock market, for example, can net you 3% to 8% in returns, but you also run the risk of having your stocks lose their value if the economy goes down even further. For example, in this crisis, we really don't know when the stock market is gonna be very good. We'll just have to see. So that is the risk you are going to take if you invest in the stock market right now. However, like I said very early on in this video, just because that the market has lost most of its value right now, that also means an opportunity for you to actually buy cheaper stocks, and, you know, it could actually gain more value in the long run when the economy comes back up again. So always assess your risk tolerance. Not a lot of people like taking risks, you know, they are risk averse. Some of them are also risk takers, you know, they can actually stomach a lot of loss because they have some sort of dream to kind of like get bigger returns in the future. And you should always assess where you are on that spectrum. If you are new to personal finance, then start saving your money and start learning different ways on how you can manage your money and use it to generate more money. If you're new to investing, there are relatively safe investment vehicles that you can start from. Look into index funds, mutual funds, maybe even bonds or ETFs or exchange traded funds, because they are low risk compared to looking or picking individual stocks. So the overarching theme of this video is that you should look into your current financial standing before you go into making a decision whether you should go in and invest everything or save a lot of your money, okay? In today's climate, we are not sure whether or not this crisis is going to last longer or it's going to end soon. What you really need to do right now is to educate yourself, because you have a lot of time in your hands, okay? Make use of that time that you are just staying at home, okay? Make that time to educate yourself, learn more things about personal finance, learn more about yourself, learn more how you can generate more money for yourself, even for your family, and have fun with it. And that's pretty much it for the entire video. I hope that you learned something new here, and if you have any questions for me, comment them down below. I'd love to see your comments. I'd love to read them, answer some of them as well, so that I can learn as well from you. Of course, please subscribe to the channel, hit the notification bell, like this video, and then share this video so that it helps with the algorithm. The YouTube always loves more engagement on videos, and I'd love to hit my goals for this year for my channel. And thank you so much for your support already. And yes, I'm also on Instagram at Daily Dredd. We can chat there. I posted some photo there. Some photo is actually just one photo, but I posted like a new photo recently, and I'm pretty happy, kind of like getting back into Instagram as well and looking into other people's profiles and kind of like just connect with them. And if you have any questions, of course, you can chat with me there, exchange some ideas and all that. So thank you so much for watching the video. I hope you have a wonderful day, and we'll see you in the next video. Bye.